Hey, Matt, it's really good to see you. We are here to kind of address some breaking news and recent financial headlines about Silicon Valley Bank and the markets. We are recording this on Monday, understanding that there's still a lot of moving parts, but I know that you really wanted to make sure that you were communicating with your clients right now in case they felt anxious. So again, just as a little bit of background, the Fed is moving to stem a U.S. banking crisis following the rapid collapse of Silicon Valley Bank. So let's start again with what's most important for your clients. What do they need to know, Matt?
They need to know that TD Ameritrade is not a bank that loans out money. You give a bank 100,000, they're going to loan out 90,000, let's say, and that causes just an additional risk for a bank run. And that's pretty much what we just went through with Silicon Valley Bank. TD Ameritrade is not in the business of loaning out anyone's money to buy a house or to buy a car.
Mm-hmm.
As far as things are concerned, honestly, it's not a big blip on my radar, but I understand the concern.
Right. And I just want to remind everybody watching that you are backed by a team of investment experts at Brookstone Capital Management. And Mark DiOrio, our CIO, was putting out a lot of communications today. But what I think he wanted to make sure everybody understands, it's important to remember that client accounts are held in a segregated account, which is what you're saying with TD Ameritrade.
Exactly.
Next question, though, Matt, I think that the logical follow-up is what if I have more than $250,000 in the bank because that is the max amount that the FDIC will insure?
Well, I would not keep more than 250,000 in the bank. Number one, it depends on your total risk tolerance, but what kind of money are you normally making on that money? You're not beating inflation. So we definitely want a diversified portfolio, and we want to make sure that we're making enough money to beat or keep pace with inflation while
Right.
minimizing risk.
Right. Not usually a good idea at any market point.
Yeah,
So
exactly.
again, I think a lot of people are trying to draw comparisons between now and the 2008 banking and financial crisis. Do you see those things as being similar?
I do not see a correlation here at all. I mean, we remember 2008. I mean, you didn't have to have a job and you could buy 5 different houses. So that was just, you could see the writing on the wall with that one. This is
Mhm.
not that situation at all. The banks that we deal with, this Silicon Valley Bank is not a bank that we would deal with on a regular basis. They had as much as 40% of their portfolio in bonds. And with the rise in interest rates, here we are, right? People did a bank run, took the money out, and of course they didn't have enough. That's not the type of bank that we work with.
Right. A lot of experts are calling the management there mismanagement, choosing to put that much money in bonds. So,
Exactly.
last question then, Matt. What are you watching for next?
We're watching for the next bank, right, or the next shoe to fall. So in any type of situation like this, basically there's a flushing out of people that have poorly managed money, and this was bound to happen. It needs to happen every 10 years or so when we go through a market cycle. Over time, this is a good thing because after we get this cleaned up, we're going to move forward to the directions that we need to be going.
So we will not be surprised if we see other banks that need to be rescued by the federal government, but it's not necessarily something that should worry us.
Exactly.
Okay.
Exactly.
So again, Matt, though, if somebody's feeling anxious about these headlines, what's the best way to reach you with questions?
I would just have them give me a call. My number is 425-256-3105. And they can schedule an appointment if I'm not in a meeting, or I'll call them back later today, but call me anytime.
Yeah, perfect. And I know you're staying on top of it for anybody who does have further questions. So Matt, thanks again for making time for me today. I appreciate it.
Thank you, Aaron.